Hi, my name is Jay and I make finance videos. And so the purpose of today's video is going to be talking about somewhat of a hot topic issue, and that is the Trump tax bill that is currently being sort of going through the last stages in the United States and is likely soon to be passed. And so more or less just going in and breaking down what actually is in the bill itself. Because I hear a lot of people talking about it, and I hear a lot of people sort of using the key phrases that keep getting passed around. You know, tax breaks for the rich, and a lot of like these sort of phrases that they use to encompass the entire bill. And I get the feeling that most people have no idea what the bill itself actually does. And you probably shouldn't have an opinion on it until you have a rough idea of what kind of things it's trying to implement, what it's trying to fix, and some of the issues that might be present there with it. And this is a fairly relevant topic for especially Americans, but it also actually does impact people around the world. So let's jump right into it. And just right off the bat, there are most certainly pros and cons for this bill. But we're going to start with the pros. Let's be a little bit more optimistic than some of the previous videos, staying on the positive side. And one of the biggest benefits of this bill is actually the increase to the standard deduction. Now, basically the way personal taxes work in the United States when it comes to deductions, you have your tax rate, so the amount that you pay to the government percentage-wise. And then you get these things called deductions. Based on different sort of situations and other things, you're allowed to deduct certain amounts from that taxes that you owe to the government. And the way it works in the States is you can take a standard deduction. That means it's kind of like an averaged amount where they have a fixed amount, and I believe it is somewhere in the realm of $6,000 right now for an individual. Or you can take an itemized deduction, where you go in and actually find each individual deduction you could take and you add them all up, and then you remove that from your taxes. So the standardized deduction is a very simple way. You just go in and say, I don't want to go through the processes of figuring out what my deductions are, if I qualify for them, calculating them, adding them up. I just want to take a standard deduction, and it's a lot simpler and easier. And so basically, in this bill, what they're doing is they're more or less doubling the standard deduction. It's a little bit less than doubling, but is increasing it significantly. And this is great. This is actually fantastic. If you've seen sort of any of my videos previously talking about tax systems, one of the most important pieces in fixing them and improving them involves simplifying them. And this does an amazing job at simplifying the tax return. And it encourages a lot of people to it's going to encourage a lot of people to take the standard deduction over the itemized deduction. It's going to make a lot of people's tax returns a lot easier and a lot simpler. It is a fantastic thing. It's actually a really great positive of this bill. And if you're an American and you've gone through the process of actually looking up deductions, I've spent a decent amount of time on the IRS website just developing content for the Finances Done Right web app, and it's a nightmare. So having something that simplifies that and bypasses that and makes it, encourages you to bypass that's a positive, a very strong positive. The second major benefit of this bill is moving the United States to a territorial tax system. What does that mean? Well, the United States is one of the few governments in the world currently that taxes multinational companies. So that means companies that operate in different countries, in multiple countries rather. So you might have a company that operates in the United States, Brazil, China, and India. So that is a multinational company. It operates in different countries. And currently what happens is that company in America would be taxed on their American income, on the income they earn in India, in China, in South America. They would be taxed on everything. And this is something that is not typical in many places around the world. And the issue is it puts a lot of companies at a disadvantage. Because if you consider sort of an example, let's say that a company operated in the United States and Brazil, and the Brazilian tax rate, corporate tax rate was 10%. Well, an American company operating in Brazil would be at a significant disadvantage to that Brazilian company because they would have to pay that 10% plus the difference between that and the American tax rate. So they will be paying a lot more than the Brazilian company. So they have higher expenses, they're going to be less efficient and cost effective, and that puts American companies sort of operating around the world at a significant disadvantage. And what this does, moving to a territorial system, is it says we're not going to tax American companies on income they earn in India, on income they earn in Brazil, or anywhere else around the world. And again, this is a major benefit because it makes American companies operating around the world more competitive. It makes it easier for them. And it solves a significant issue that the American government has right now. And that is that a lot of companies choose to keep their money offshore so that they don't have to pay the taxes when they bring them back home. Because the income that they earn abroad is only taxed when they actually bring it back into the United States. So currently, companies like Apple and other sort of major multinational companies, a lot of them have multi-billion-dollar sort of accounts with offshore money that is just sitting there, that isn't being taxed, that isn't being used to sort of develop new innovative companies, expanding, growing. It's just sitting there in offshore havens like Ireland and the Netherlands because they don't want to pay the taxes. And so moving to a territorial system not only makes American companies more competitive, it also means that companies are more likely to actually bring their money back into America and use that money to expand and grow and do sort of good things there and use it for a economic purpose. So that actually is a very important benefit as well. And any of the money that is currently out in the system is going to be at a reduced tax rate. So anything that is still offshore and is waiting to be taxed, companies have the opportunity to bring that in at a significantly reduced rate than what it was previously. So another significant benefit that makes American companies more competitive. The corporate tax rate is going from 35% down to 21%. Now, this is something that I think a lot of people get confused on. When they see that, they immediately go, oh, these are tax breaks for the rich. This is awful. It's really important to understand that a corporate tax rate is different than a personal tax rate. A corporate tax rate is the company being taxed, the income that the company is making. Then when that company passes, income down to employees and CEOs through either giving them salaries, dividends, interest, anything like that, that is then taxed at a personal rate. So corporate tax rates are different than personal tax rates. And I think people maybe conflate the two, and that's an issue because America has some of the highest corporate tax rates in the world right now. And that's an issue because it hurts American companies. If you're sort of at all familiar with the economic situation in the United States, they're struggling when it comes to things like factories and other industries that are sort of moving to places like China and India and Southeast Asia and South America because it's cheaper. Now, part of it is because labor is cheaper and there's other sort of closer to natural resources, but a huge part of that also is that it's lower taxes. You're not going to be taxed as much, and that is a significant benefit for a lot of companies considering to move to other parts of the world. And by lowering the corporate tax rate, you are actually making America more competitive and more viable as a place for corporations to go. Now, if you've seen sort of some of my other videos talking about taxes, I mentioned that America is sort of the destination for people already, so they don't have to do anything really to incentivize people. That's at the personal level. On the individual, everyday person, the ideal place typically to put your money is in the United States because it's safe, secure, politically, traditionally, it's been safe and secure, and it's just an ideal place. So you don't have to really worry about making it tax advantageous for the rich individuals. But for corporations, you do have to be competitive. So this is good. It increases America's potential to be competitive for corporations looking to expand there. And it also increases the potential for companies to situate headquarters in the United States in conjunction with a territorial system. And the last sort of benefit, personal tax rates are getting lowered, so your sort of percentages brackets that you pay, this is for the individual levels, and anybody making more than $10,000 will see a reduction in their taxes. And that is like another little thing that I see a lot of people talking about. This only benefits the rich people and middle class. Well, really the only people that miss out on sort of the major benefits in this sweeping tax reform are the ultra poor, people making less than $10,000. Anybody making more than $10,000 will see benefits from tax rate cuts, and even people that are making less than $10,000 will benefit significantly from the standard deduction being increased. So it more or less There are actually a lot of positives with this bill, and I think a lot of people are overlooking that just because, a lot of the things that Trump has tried to push through recently have been less positive. But there are some glaring issues with this bill, and that's what we're going to jump into now. The biggest by far, and this is really the marquee issue that people should be up in arms of, in that it's going to cost around $1.5 trillion over 10 years to fund this. America is in a massive amount of debt right now. They have a crippling amount of debt, and they cannot afford to be adding on more. So that's really the major issue with this bill. There are other issues that I'll talk about in a little bit, but adding on more debt in the current situation with what's going on in the United States, that's what everyone should be freaking out about. It's not that the rich are getting tax breaks, because there are some, yes, but they should be freaking out about the $1.5 trillion in debt that's going to be added on. America needs to be getting rid of their debt. They need to be paying it down, not adding on to it. That is the major issue with this bill. Another sort of con is that the interest deduction, so in the United States, when you buy a home with a mortgage, you can deduct the interest of that mortgage that you pay from your taxes. And essentially what they're doing is they're lowering the amount that you can deduct for the loan. So it's going down from what was previously a $1 million loan to $750,000. Honestly, I'm not even sure if that actually is a con, because in the United States, because you're allowed to deduct interest, it often encourages a lot of people to take on more debt than they might necessarily be able to. And by doing this, it might reduce or disincentivize people who are taking on too much debt. So I'm not sure if it's necessarily a con. It's not necessarily a bad thing. And no more home equity. So essentially what that means is, in the past, if you fully owned your house, you could take out a mortgage to, say, fund a business or something else. Now you can deduct none of the interest from a home equity loan. So that's that. Estate taxes. The con with estate taxes is that they are increasing the amount you can pass off to your estate without paying taxes on it. And if you've seen any of my previous videos on fixing a tax system, having estate taxes is one of the most efficient ways to actually fix a tax system and ensure that you don't have these dynasties like the Trump family, where they're passing on their $1 billion down to the children and sort of keeping that in the family. It is really important to have efficient tax systems, to have strong estate taxes, and by reducing these and making it easier to pass money through your family. And this is not like, your everyday family who has a home and $300,000 in savings. They're never going to pay taxes, estate taxes. This is the multi-million dollar levels where you have these massive family corporations, 7 houses. Those are the people that benefit from this estate tax. It's not the everyday people. Everyday people wouldn't get hit by the estate tax regardless. So that is most certainly a con. Slows the inflation adjustment. So for all of the various tax benefits that you have, what happens is every year they're adjusted for inflation. So every year they get a little bit larger to account for the increase of prices that you see. And what they're doing with this bill is they're changing the way that it's calculated to mean that it's slower. So over time your benefits are going to be worth less than they would have been on the previous sort of form that they used. So it's kind of a sneaky way that they're saving a little bit of money on this bill. So it's not great, but it's not necessarily bad either. It's going to be a minor effect on the actual inflation change. And then no need for health insurance. So again, if you're at all familiar with Obamacare, the way it worked, and it's a massive bill, but like the two marquee sort of things that go along with it is that everyone has access to health insurance rather, regardless of pre-existing conditions. It's not a good idea, but they did it. And then in conjunction with that, they forced everybody to buy health insurance to make up for that sort of having pre-existing conditions, or else you faced financial penalties and things like that. They sort of work intrinsically. If you have everyone can get it without worry about pre-existing conditions, you need to have the second part. And so basically what the Republicans are doing is they're getting rid of the need to have insurance, they're getting rid of the penalties. So essentially they're setting Obamacare up to fail. That's effectively what that does. Now, I personally don't view Obamacare as something that was effective. You may view it differently, but this is the wrong way to do it, because what they're doing is they're creating a failure in the system that is ultimately going to lead to it all failing, and that's not an efficient way to do it. That means a lot of people are going to lose out on health insurance, and it's not the way to do it. But that is the approach they're taking because their previous bills did not get through when it comes to healthcare, so they're just putting sort of a ticking time bomb on that and pushing it off and waiting till it fails, and then they will go in and replace it, is what I perceive from that. Ultimately, and there are some other small things as well, there's a lot of changes to individual benefits when it comes to taking care of dependents with disabilities, childcare changes and things like that, but they're sort of minor things that you can go look at yourself if you're interested, but these are sort of the marquee issues of the bill, and it is a massive bill. And there most certainly are individual parts in there too that do exclusively benefit the ultra wealthy. One of the more controversial ones is sort of tax advantages for people who own real estate LLCs, so real estate companies like Trump and some other senators. And yes, it is sketchy. Yes, it looks like they are designed just to benefit these small, ultra wealthy individuals. But on a whole, the bill itself, for the things they're trying to pass, these are actually massive benefits that the states really needs right now. The biggest, by far, issue is this debt. It just doesn't make sense. They cannot pay that off. If America had zero debt right now, if they had no national debt, and this bill was presented like this, I would actually say this is a fantastic bill for America, and that it solves a lot of their problems, and this is actually a good thing. But the fact that they already have trillions of dollars in debt, the fact that they're still increasing expenses and they're not finding any ways to pay that down, and they want to add more, that's the issue with this bill. It's that they're already massively in debt and they're proposing putting themselves more into debt with no path or solution to the crisis itself. That's really the major issue with this bill. It's that they're not making enough money to make up that debt, and that's the issue, and that's what people really should be worried about when this bill does get passed. So hopefully this has helped sort of explain some of the issues, pros and cons of the bill, and hopefully educate you a little bit more. Again, I see a lot of people talking about this bill that I don't think know really what it does or the marquee issues. They just hear the words tax breaks for the ultra wealthy and then immediately hate it. And it's unfortunate because there are benefits that do need to happen in the United States. And really the major issues, the debt, they're sort of taking a back seat to the tax breaks, which is unfortunate. So hopefully this has helped you out a little bit. As always, if you like the video, very much appreciate a like, share, and subscribe, and have a great day.